What's up, investors? Welcome to the Semiconductor Show, where we talk about all stocks related to the semiconductor industry. And today we are talking about ASML. They recently had their Q1 financial statements released. So we're going to be talking about what were we expecting them to do during this first quarter, what did they actually do, and then we'll go into what are they forecasting for the next quarter and beyond. So let's just start off with a brief overview. We'll also do a stock analysis at the end towards the end of the show. So just a brief overview of what they've been doing for this current year to date. They started off at around 800 and they're currently at 620. And in this past week, they started the week at 605, they're currently at 620, and they had a high point at about almost 650 right after their financial statements were released. So I do expect good news, but we'll dig into it a little bit further. So what we expected them to do was ASML has guided for the first quarter sales to be at about 3.4 billion euros, which is about $3.6 billion at the midpoint of its guidance range. While that's lower than the year ago sales of 4.4 billion euros, investors shouldn't be alarmed as the Q1 guidance reflects a change in ASML's revenue recognition. And we'll go into that in a little more detail as we go on. So it's recognizing revenue from these sales only when the final testing and acceptance of the equipment happens at the customer site. ASML points out that the total value of its shipments in the first quarter would have ranged between 5.3 and 5.5 billion euros, which would have translated into a 23% increase in revenue year over year. But because of this guidance, it currently dropped. So once we actually pull up the numbers, we'll go into that. The company is also forecasting for a 20% increase over the current year. ASML's 2022 guidance indicates that it could finish the year with around 22.3 billion euros in revenue compared to last year's top line of 18.6. Demand for extreme ultraviolet lithography EUV machines that it sells is expected to increase at an annual rate of 25% through 2026. So one of their main revenue generators is expected to grow over 25% or at 25%. So that's why we're interested in them, and they're the only company in the industry that sells this. So another reason why we like them. Analysts expect ASML's earnings to grow at an annual rate of nearly 30% for the next 5 years, up from 18% annual growth that it clocked in the past 5 years. So before it was 18% annual growth, now they're projecting 30% annual growth. And that's just the analysts. So that's what we were expecting them to do. Let's just kind of see how did they actually fare doing that. So in the Q1, their net sales were 3.5 billion euros with a gross margin of 49% and net income of nearly 700 million euros. But they do have Q1 net bookings of 7 billion euros. So went out on their website, found their supplementary information on their financial statements. So I feel like this is going to paint a better picture for us. So right here, this first slide, that just shows us their breakdown in systems. And the thing that right here we have Q1 2022 on top and last quarter on the bottom. And the thing that stands out to me is this middle chart where it shows the end use. It went from roughly 75% in logic and 25% memory to a near 50-50 split. And whenever I think of memory, I think of Micron. And so that just gets me interested in what's kind of going on there. So let's scroll down a little bit more. And this shows net sales in euros by end use, and they have three main components. They have the installed base management, which is the yellow up top, which has seen fairly good growth over the past couple years. Then we have logic, which is kind of their main system. So I have to imagine that's clearly the component that they're selling to like TSM and Samsung and one or two others, I believe. And then this memory, this one's new. They did have a pop back here in 2018, and then it dropped, and now it's kind of climbing back up. And overall, though, what draws my attention is in one quarter of 2022, they're at $3.5 billion. And if we times that by 4, we're not even close to $22 billion like they thought it was going to be, because 3.5 times 4, we're looking at 14. That's about 2020 figures, but we have to factor in their different revenue recognition that they've come up with. So let's kind of keep scrolling here. This is some of their sales. We want to look at some of their financial statements. So this right here is, I'm still kind of on the fence about it, but this kind of gives me a little more hope than what I was seeing above. Because right here, when we look at this top line, the net sales, when I'm looking at that line, they're going down. Last year they did $4.3 billion in net sales. And sure, they had a little dip in the second quarter, but then they shot up to like 5 billion, and now all of a sudden they're pulling back to 3.5 billion. And another thing that kind of concerns me about them is this gross margin. It was at about 54% last year, and it dropped out of 51, close to 52, back up to 54, and now all of a sudden that's at 49. Like, what? I just don't like that. And so, like, I have to imagine that it's due to, as they make more sales, they become more streamlined, and because their sales dropped a little bit, then that's why the gross margin is not as high. The key difference is what ASML is stating is that their sales are actually just as good, if not better, than all these quarters, except maybe Q3 where they had 5.2. They're saying that their quarter 1 2022 figures is more in line with this high quarter 3 in 2021. But the difference is that revenue recognition. So if we actually pull down to the very bottom, this net bookings, that's what they're referring to. And this is what gives me some hope here, is that it's at roughly $7 billion in net bookings, which is right in line with what it was last quarter. And it's not double what it was last year, but it's clearly a lot higher. And they're thinking that, we're definitely going to have to see how this turns out over the next quarter, because these early bookings, they're not allowed to convert those into net sales. And so hopefully we see a jump in the quarters coming, because this is the first quarter that they've implemented that change. They've always had previous bookings, but we're actually going to go into it a little bit further. It has something to do with how their delivery of their machines, and I guess they're delivering their machines to the site, the sales site, without it being tested, in the hopes that that kind of speeds up production at the purchaser's facility. That's kind of the thought process, but we'll go into it a little bit more. And then as far as consolidated statement of cash flows, this piece kind of got me on edge too, because I'm focused on this operating activities, net cash provided from operating activities, and you can see it went down. They actually had a loss of nearly €500 million, and maybe that's like a Q1 thing, because if we look at last year, they were down about €1 billion, and then of course, the rest of the year happened and they did great. So maybe that's just like a Q1 thing that they kind of pulled back, and then all of a sudden it ramps up as the year goes on. But yeah, so like overall, there was just a couple like yellow flashing lights happening here. I'm not going to say red, but there's just some warning signs here, like what's really going on. But the net bookings of 7 billion, that tells me that there's hope here, and so I definitely want to see what happens in quarter 2. But as far as sticking with what they actually did, so ASML expects that is what they did. So now going into the future here, ASML is expecting their second quarter net sales to be between 5.1 and 5.3 billion euros, with a gross margin of about 50%. So let's go back here. They're saying that their net sales is going to be more in line with a Q3, about 5.1, 5.3, and then we'll see how that translates in terms of their net income and in terms of net cash from operations. But going back to what they're expected to do in the future, this I mentioned this in a previous video that they had the share buyback program, and they started this last year, mid last year in 2021, and it's expected to be over by the end of 2023. ASML intends to purchase $9 billion worth of their stock in that repurchase plan, and just in this quarter alone, they purchased $2.1 billion. So the fact that their stock is pulling back, the company is aggressively buying back their stock during this period. So that gives me more hope in this company, because their own company fully believes that they're going to grow and grow quickly. And the fact that it's dipping as it is, the fact that they're buying so much, it lets me know they believe in themselves, and so we need to believe in them too. Next article here, ASML, which expects to catch up with its current order backlog only sometime in 2024, is taking steps to cut delivery times and increase productivity of its tools, even as it tries to expand production. Not including in the first quarter sales were equipment worth about 2 billion euros that customers asked to have shipped immediately before it was fully tested. So this goes back to the point I was making earlier. Those deliveries cannot yet be booked as sales, but ASML expects to recognize that revenue over the coming quarters. So that's that net bookings of about 7 billion euros that they're just not able to recognize, and they're saying about 2 billion of that, they already have their equipment at the purchaser's facility. It just hasn't been fully tested. So about 2 billion should be recognized very quickly in Q2, and then of course you have the normal course of business. So I do expect good things to happen in that second quarter, because this was just the first initial change in revenue recognition. So we'll see how that actually transpires as this quarter goes on, and then as Q3, Q4, as the rest of the year trails on. Dassault, he's one of their board members, I believe, or maybe he's in the C class. Dassault said the company had received multiple orders for its next generation EUV high NA machine, which is good, which is still being developed. For the first time, there were makers of memory chips among such clients. So this is the thing that's interesting to me. ASML's biggest customers, which always knew these ones, they have TSM, Samsung, and Intel buys their machines, but now all of a sudden, memory chip makers, we have this SK Hynix, never heard of, the name sounds familiar, but I don't think they're American based. And then there's Micron. So Micron's buying ASML products now. That's very interesting, I can tell you that. And all major chip makers are also customers. So they're referring to like AMD. I think they're just saying like, you know, by default, because AMD buys from TSM, or, you know, things like that. But otherwise, the company has forecast average annual sales growth of 11% through 2030 as part of a structural increase in chip demand. I mean, that's just phenomenal. 11% over the next 8 years. And you have to imagine there's going to be years where it's way over that. We said earlier that they're projecting like 30% growth over the next like 5 years. If that's true, we need to be buying the dip on this one big time right now. And then to wrap up the articles, there's Wennick, which is their CEO, said he hasn't seen any sign that demand for his company's equipment is tapering off. The Dutch company is only able to fulfill about 60% of the orders for its mature deep ultraviolet lithography systems this year. And so I just need to, I tried to emphasize it when reading this, that the demand for his company's equipment is not tapering off. Okay, that's just his. As far as the other semiconductors, I haven't heard anybody say that it's been tapering off for them either, but I just wanted to emphasize that he's referring to just his company's equipment, none of the other companies. So in terms of him and what his company does, they're in full go mode right now. So ASML seems like very promising, but I definitely want to see Q2. So let's wrap things up with a stock analysis portion. So right now, You can see we're still in that downtrend. We're right here. It's currently Thursday, so this green line that ticked up a little bit, that's becoming more firm in what we're going to see for how this week ends. This bottom line, I feel like that's pretty fair. I mean, I could widen it. Like, it doesn't have to be like a parallel line here, but I feel like, I mean, that's where I left it. I'll just leave it right there. Overall, we're still clearly in that downtrend. They did have good earnings. It wasn't as good as I would have liked it to be, but once again, it seems like that's based off that revenue recognition, adoption principle, whatever you want to call it. Overall, it looks like if this company continues to pull back, I mean, we're right at about 600. It's currently at 620. I do have some support at 601. They did go below it, but they came right back up. Overall, we are still in that downtrend. We'll just kind of have to see how this continues on for the next couple weeks. I think if it were me, I would be very content with buying at as close to 600 as possible. I'd be very content with that. If it wants to continue to pull back, I would say the next resistance line that I have a very light one at 560. I have a little bit more firm one at 520. Based on the pullback that it's having, along with just the broad market, we could definitely test these lines again. We definitely went below 600 at one point, but we bounced back very quickly. So that gives me more hope that that 600 mark is very support sensitive. If we do come below that again, though, I just want to warn people that all of a sudden 560 is then on the table if we go below that. But for me, specifically me, I'm interested in buying this at 600. If it pulls back below that line, I'm probably going to hold and see if it can go to that 560 mark again. But yeah, as far as this company, yeah, if I was able to buy, say, like if I want to buy, say, like 10 shares of this company, the closer it is to 600, you know, I might buy 2 shares. You know, if I want to build this into a 10 stock position, then I would probably buy 2 shares as close to 600 as possible. Wait maybe another couple weeks, see how it works out. If it pulls back to 560, yeah, I'll probably buy another couple, maybe 2 or 3 at that point, and just that's how I'm playing it at this point. But otherwise, that's it. I hope you enjoyed this show, and there's going to be more earnings coming out. AMD is going to report very soon. I think some others, I think Qualcomm and Intel, they're going to be reporting soon. So there's going to be some great news coming. We'll just keep watching and see how it goes. But yeah, that wraps it up. So please like, please subscribe. There's also a Weibo account in the description below. If you don't have an account, please consider joining that, because if you use that link in the description, you will get 5 free stocks. And that's it. So I hope you enjoyed. Have a great night, guys. Bye.